This is my ultimate scalping chart. I have it set up on the 1 minute, but it has all the liquidity pools. I know it looks kind of messy, but these are really important when you're scalping. Like I always say, the market makers are going to target liquidity. So if it's going to be during a retracement, then they're going to target buy liquidity because they want to knock you out of your positions. They want to take your positions. So there's your buy liquidity with sell liquidity. When you see these pools that are together like this, these are very high probability. This is what I know, at least in XRP and Bitcoin, the market makers always head towards these pools, always. You can see here, you can go through and count. So this is how many price ran through here. You can see all these buys were filled by all these limit asks. So these would be market buys, and then these would be passive sell orders, ask orders. So 622. And that would be just within this candle right here. Keep in mind, this is the 1 minute. So it also filled a little bit right there. And then you would take this, and I have a lot of different indicators. Well, these I don't really consider, these are tools, order flow tools. They're not your retail indicators. But I have the market profile, anchored profile, so it follows price action with whatever time frame you select. So right now, let me clean some of this up a little bit. So right now I have the 5 minute setup. So 5 and 1 minute. So you can see the anchored profile. I have it set on gradient. So the brighter the color of the node, that is the more important, the higher. Actually, I don't even know if I have this set on gradient. I normally do. I know I have the volume profile set on gradient. So this would be the weekly volume profile. You can see it gets brighter. Specific nodes will be brighter than others. So those are more important nodes. More volume could be, I have it set up for delta. Even specific times, I have sessions isolated. But what I was saying here, so you have your point of control on each profile. So within this 5 minute, or I'm sorry, 1 minute right here, and this 5 minute profile, you would have your point of control being down there where the majority of volume is traded. These are very important. These would be your sorry, I didn't get much sleep last night. These are your very high probability pivot areas, especially if you can line that up with a liquidity pool and other factors. And then when price is heading up here into resistance, we can find the resistance by, for one, on the previous wave, whichever one. Well, this is the 1 minute. We'd have to go back on like a 5:15 to see what this is mitigating. But for instance, when price, say next time after, say if this were to reject and price were to come back up here without it being bullish, and it would be mitigating this wave, this is when you get your pullbacks, it would pull right back into here. Typically, pull right back into your order block that influenced this buy. So obviously right there's a good order block. It shows 300,000. There's your point of control. This is a very high probability area. And then when you get your sell off on the next wave, you can take, mark that. This is how I hit these specific targets, guys. We mark, there's a bunch of them actually in here. So these would all be high probability scalps. When price goes under and breaks the low and becomes bearish, we wait for the pullback into these zones, and you can short each one. So when we get the break, if it does, if only if price isn't bullish. This is important. You have to determine whether you're in a retracement, a rally, correction. There's different different structures, different cycles within each market on each time frame. So you want to get in the habit of, going through yours and just trying to spot, hey, are we bullish, are we bearish, are we in a corrective wave? Is this a retracement? What's going on here? And then with that information, so once this were to break, and another thing you can use price action rules, basic price action rules, if whatever time frame you're trading on, so obviously this is the 1 minute, if this closes above the high wick, which it did, you can expect a continuation on the bullish structure. Now, if this were to just wick up and wick back down and close below the high of the previous wick, then price would become bearish. So in that case, we would wait for a confirmation, wait for the close, break the low. So it'd break this order block right here, break the low, probably come down in here and pull back up, and then you can short your targets safely. I'd aim for the highest one, short, if it go down, come back up, short, stay in this, well, it really depends on your style. But I would stay, I would mostly stay until we brought it back down here, depending on where my lower targets are, which they go all the way down. And to find those, you just got to find the liquidity. The market's always going to move to balance itself at all times and collect as much liquidity as possible. Price, say if it's going to go up or if it's going to go low, you can always expect those pullbacks into those high volume liquidity pools because it's free liquidity. Obviously, the market makers want to add as much to their positions as possible. And when you have liquidity trapped in a specific area, if it's, high volume, you can always expect to pull back into it before any major move. Oh, cool, my orders got filled. So yeah. So we got the close above. Now, if price takes out this low, then we can start looking for shorts until we get back into a bullish structure. So that's why I always say, like, rule of thumb, if you're not hedging, is to trade in direction of the market, trade with the market, just because, you'll get those strong rallies that bust up out of nowhere, and it's a good way to get liquidated if you don't have a stop loss, or it's a good way to get your stops taken, and then to watch price just reverse and come back and hit your initial target in the first place. So just some pointers I wanted to show you guys. Also, the money makers. So I have speed of tape, bull bear, and then delta speed of tape. Delta would show me whether it's positive or negative delta. If it's positive delta, that would be a bullish structure. Keep in mind, this is the 1 minute, and 1 minute things can change abruptly. So this is more for, you really want to be experienced when you're trading off of a 1 minute. Obviously get your bias off the higher time frames, but I would like to get you guys, I'm sure a lot of you guys do trade on the 1 minute, but I'd like to get a lot of you guys, especially you do like the scalp trading off these. I even use the 5-30 seconds sometimes, and that's how you can hit those sudden precise moves in the moment. And if you're sitting around waiting for a 30-minute candle to close for your confirmation, I can knock it down on a 5-30 second and watch the breaker structure in real time, and it's going to follow. So say if it closes on the 5 second, it's going to close on the 30 second, it's going to close on the 1 minute, it's going to close on the 5 minute, it's going to close on the 10 minute. That's just the way these markets work. And reason being is you have a lot of professional traders, the ones that are actually supplying the volume, trading in unison with one another. So whether it's a group behind the scenes pulling the strings, or if it's just the market, the basic market mechanics, market fundamentals, everybody on the same page, you're going to get those high probability areas with multiple indications with confluence. You can have your market profile, your volume profile, your liquidity pool with 5-6 things lined up in the same area. It's confirmed. It's confirmed more ways than one. And when you're dealing with volume, liquidity, those are real confirmations. When it comes to other indicators, trading view indicators, I've seen those things go bad in every scenario, every single one of them. Tried them all, you know. And for me, I don't know. I prefer order flow, liquidity, volume, delta, and balances. You know, the things that actually shift the market. But so you can see here, there's not a lot on the speed of tape. This would be trades per second, which I have configured for XRP. This is your bull, this is your bear. It shows us the speed of tape speeds up, so a lot of trades got submitted super quick, which are probably bots in this area where we have these sell blocks, negative delta. Let's start up here. So you got the positive delta, bull candle, and a lot of these things are going to be reversed depending on which time frame you're trading on. And then I have this configured for neutral volume, which is usually a pivot area. So you have the positive delta with the speed of tape in bull favor, positive delta, bull volume node, and a buy block. To me, I mean, right there, that would just scream that I'd have to turn the heat maps on for confirmation, but that to me just screams that it's an influencing move. We really got to see what happens here. I would at least expect a pullback before continuation. Doesn't have to be big, but enough to soak up this liquidity. Like I said, they're not going to want to leave liquidity behind. I mean, this is a lot of contracts. So I would at least expect a pullback, say to like right here, 62.20. But I actually anticipate it. Well, my overall target is 62.80 for this rally, and then I would expect, so here, hit this, pivot off of that to fill their orders, take you out of your positions if you're long, and then there's the sell liquidity. So you can pretty much automatically determine the price will pivot here. Could be small. It's probably going to be small because when you compare the two, there's a lot more buy than sell. 7, 1.98, yeah, it's a lot more. And these are actually most recent orders. So I would expect, I mean, off the 7, I'll see even more now. Almost 1 million contracts. So you would probably get a nice pullback into here, probably breaking structure, mitigating all of this to get price back down into here. Well, not that far. So right around in here to grab all of this. I like to find the largest orders in the book. They've been sitting there for a while. It's a big one. They like to use those, so they would say in a long scenario, they would bring price down here and use this free liquidity to fill their orders. And then there you go. When they're bunched together like this, these are money pools. I mean, that's a lot of free contracts just sitting there for the taking. And you know, if it's say it's a major institution, they're going long and short, and they're hedged. That would be a perfect hedging value right there. I mean, they could fill, even if obviously they're not going to fill all of them because they're going to stagger their orders. They like to stay hidden, you know. They're not on display. They're very sneaky. So they would level it. They would fill some here. They'd fill some here. There. Especially in a bullish scenario. And that's why you have price ripping up through all this sell liquidity, because they're using these sells to fill their orders. They're just sitting there. So they run it up, buy all of that, probably get a large volume spike, direction with bull open interest. There you go. You can see bull outweighs the bear here, and that was right here. Spike up. Yeah, look at that volume node. Go back. In comparison to the rest of the chart, you know, it's so you take this node, run that up here to this node like a bucket, bring it back over, and then mark this area right here as a very high probability because you have this long node here and this long node here. Are you okay? Nice. And then same with up here. Each one of these long nodes, you would take that across to find, well, this is also set up on the weekly. This is a weekly profile. So scroll back in time. I don't even know if my 1 minute goes back this far. Boom. You line that up. And then there's your liquidity. You see that? And then there's your point of control. And then there's your sell liquidity. Buy liquidity. Long node. Sell liquidity. POC. Look at that rejection. This is what I was saying. I'm expecting price to eventually make its way up here, probably even higher. But for now, on the 1 minute scalping, I would expect a nice rejection off of this area. That's your POC for the week. Yeah, all these, like I said, they're gradient. So the brighter the color, higher level of importance. Also these low volume nodes, these are targets as well, but not in this structure. But say if price is targeting this, that's why you get those like runs a little bit higher or lower. But being that it's targeting this, then I would find the volume node the lowest right after that. So probably right here. Also, that's the bottom of your initial balance, which I'll explain that later. See this yellow part? It's your initial balance. On the weekly, initial balance being where price started on the weekly. So in a sense, it's a weekly opening, but a weekly opening zone. And this is dynamic, so it changes with time. So yeah, I would expect, you know, price to pull up here, 62.80, and then find the low node right after that, which would be right there. And then taking all of this. And then on the way down, it'll mitigate each level, you know. Break a structure, pull back, pivot, the top of the wave, find the bull block that influenced that move up into the distribution zone, find that, short that block, pull back, short the next block, just like I was showing you in that one wave. And then you can ride that down to as far as the lowest liquidity pool with the highest quantity of free liquidity. Okay, I got to get back to trading, but I'll post more content soon.